Why did the federal government decide to bail out Citigroup?
Well, the federal government decided to bail out Citibank because it had to be done. They're too big to fail. And the feeling was the market was losing confidence in them. And as they've been doing, they had to do something very quickly over the weekend. So they've come up with a plan to add $20 billion to the $25 they've already given out of the TARP fund, plus to guarantee $306 billion of the so-called toxic assets. And it seems to have worked. The stock market recovered. Citibank shares are up, and everybody's happy today.
So tell me, though, you say too big to fail. Why too big to fail?
Well, Citibank is basically the second largest bank in the country. And if they went under, it would just cause an absolute cataclysm in the financial sector. Both President Bush and Secretary Paulson and President-elect Obama say you have to save the financial system. And Citibank had to be saved. It just could not let it go down because it's so big.
And, we can talk Citigroup, since we're talking the big mammoth company, Citigroup. Give me a sense of what would happen if there was no bailout of Citigroup.
If there was no bailout of Citibank and Citigroup, you would just have a complete freeze-up of the credit markets, which are already extremely tight. You'd have interest rates soaring, total lack of confidence in the entire banking system, not only domestically but worldwide. It could not happen. They had to do something to stop it.
And the reach about it, because it's too big to fail, is it because it's got, branches and customers all across the world?
Citigroup has about 200 million customers, about $3 trillion in assets. And you just could not let something that big fall. You just had to do something, and that's why they've come up with this plan.
So sort of the average person waking up today and learning about the Citigroup bailout, isn't it just people starting to say, another day, another bailout?
Well, it is. We've had several bailouts. We've had Bear Stearns. We did not bail out Lehman Brothers, which turned out to be a disaster as far as I'm concerned. Now we're bailing out Citicorp in various ways. We've had the TARP program, which has put hundreds of billions of dollars into other banks. If we had not done this, I think we would have had a total collapse of the financial system. So, yes, it's bad we've had to put money in, but what's the alternative? To let them completely go under and have a seize-up of the financial system, that is not politically palatable.
Will it work? Will it calm jittery investors, restore confidence, put an end to some fear in the market?
I think it will work in the short term as far as giving people confidence that Citibank and Citicorp is not going to go under. The feeling is that they're going to have to do this with other banks as well. So in the short term, it is restoring some confidence. But it is not getting at the underlying problem of the toxic assets and the real estate market going down and the credit crunch. I mean, it's not solving the problem. It's kind of getting it from getting worse at the moment.
Is it just window dressing?
Well, it's not exactly window dressing. We are actually putting money in. The bank is going to continue to lend. It's going to continue to operate. So it's more than just show. I mean, they're actually getting real money. And the major thing that they did was they split Citicorp into the good bank and the bad bank. Now, this was done during the savings and loan crisis, where there were some good assets and there were some bad assets. They kind of created these bad banks, and that's what the $306 billion is, getting the toxic assets, the commercial and residential mortgages and collateralized debt obligations, all the stuff that's bad as a separate pool, and keeping the good bank going. The government guaranteeing that bad pool is going to prevent further damage to the overall bank by getting it out of their, total pool of assets.
Is it enough, though? Is it doing enough to, restore confidence in a very shaky market?
It is helping in the short term, but it doesn't get at the underlying problem. I think people are still very, very nervous. I mean, look what's happening in the Treasury market. Treasury bill yields are down to 0.005, basically 0%, because people just want the return of their money, not a return on their money. 10-year Treasuries are yielding about 1%. 30-year Treasuries are yielding about 3%. There's just money pouring into Treasuries as a safe haven. On the other hand, risky assets, junk bonds, for example, are now yielding about 20%. So the spread between the safe, risk-free Treasuries and anything with risk has widened dramatically, and that's giving you an indication of how nervous people are right now.
Yeah. Give me a sense if this let me ask you this way. Is this a good deal for taxpayers?
I think it is a good deal for taxpayers because the alternative would be much worse. Letting the financial system completely come to a halt and having an entity as huge as Citicorp go out of business would clearly cost taxpayers a lot more than the $20 billion we just put in, plus guaranteeing the $306 billion in assets. So yes, $20 billion is a lot of money, but it's a lot less than they would have to spend if the whole system went under.
Paul Krugman, the award-winning columnist, was just saying, though, today it had to be done, but in his sense, it was not a well-structured deal, that there's much more risk for the taxpayer than return the taxpayer is getting. What's your response to that?
Well, there is risk to the taxpayer, but the bigger risk is letting the entire financial system go under. So we get $20 billion from the TARP. Now remember, they're giving preferred stock, which is also getting an 8% yield. So in fact, they're getting a decent return for shareholders if they pay it, which hopefully they will. But I think not to do anything, which I guess some people say is the best thing, would be far worse.